Okay, thank you for joining us today. This is Alan Brockstein, and before we get started, I have a very quick disclaimer. None of the content within this webinar should be construed as investment advice. New Cannabis Ventures is not an intermediary, broker-dealer, investment advisor, or exchange, and does not provide investment advice or investment advisory services. No securities are being offered in this webinar. We have no access to non-public information. This webinar is not a place for giving or receiving financial advice, advice concerning investment decisions, tax, or legal advice. Please note as well that Canopy Growth is a client of New Cannabis Ventures. We host a dedicated page on our site that helps visitors learn more about the company, the fact-based, data-driven investor dashboard. Investor dashboards quickly tell the official story and financial status about the company. You can visit the Canopy Growth dashboard to get the most updated financial information and news on the company. All right, with that out of the way, I want to introduce Bruce Linton, who probably doesn't need an introduction. And we have a very large crowd today that will likely have a lot of questions, so I'll keep it brief. Bruce is a visionary who saw an opportunity 5 years ago when Canada was about to transition from the old system, MMAR, to the ACMPR predecessor, MMPR. Bruce, who has a technology background, has assembled a team, as Bruce would be the first to say, there's made a bunch of mistakes because there are no playbooks to follow. But the team has learned from them to build a company with market share, leadership, and the largest production footprint in Canada, where it's positioned for full legalization next July. Canopy has also positioned itself as the leading global player, as Bruce will surely discuss. I've been following Canopy Growth since they went public in 2014, and I remember meeting Bruce at a conference in Vancouver in that year. I'd spoken with him by phone once, but this was our first face-to-face meeting. Canopy had just priced a secondary offering, and Bruce was not able to address the audience due to some rules about a quiet period. He went up at his scheduled presentation time, explained the situation, and then said that the rules did permit him to speak privately. So he invited anyone who wanted to talk to chat in the hallway, where he was mobbed by people who wanted to learn about the first publicly traded LP in Canada. Well, we have a big crowd today too, but no worries about Bruce being constrained. With the announcement of the game-changing strategic investment earlier this week that closed today, we couldn't be more fortunate about the timing of today's webinar. Before we get going, I want to thank especially Bruce for taking his time to be with us today, and also Tyler Burns, who heads up Investor Relations, and Jordan Sinclair, who heads up Corporate Communications, for their help, as well as you, Olivia, so thank you. We will be getting into the presentation now. Bruce will be walking us through the short investor deck, and then we'll take questions. At any time during the presentation, you can type a question in. There are a lot of attendees today, so there's a good chance we won't be able to get to all the questions within the next hour. But Bruce will answer as many as he can at the end of his prepared remarks. So now, please welcome Canopy Growth CEO Bruce Linton, who will talk to us about the company, a company of firsts and a global trailblazer in the legal cannabis industry. Welcome, Bruce.
Thanks, Alan. And I think probably most people on the call would appreciate the reason I'm doing the call is certainly I think I've contributed something to how the sector evolves, but Alan glossed over the first conversation I had with him was while I was driving in Toronto, and I thought this guy is actually asking rational financial and business questions, not just general marijuana questions. And so thank you too. You've helped make the sector quite a lot better.
I appreciate that.
I was going to drive the slides myself, but technology does not permit that, so Alan will click them for me. Don't gloss over the safe harbor one quite so quickly. And I thought usually you would have the word a bing sound to change the slide, but perhaps in our sector I'll say bong. And so you'll flip the slide at bong. Bong, you can flip the slide. So what's going on? I don't know the demographics of the people on the call, but the reality is if I were talking to you when I first met Alan, there would be a part of Canada will be colored in and Israel will be colored in, and to an extent Uruguay, and those would be the only countries really where there was any discussion or action around legalized access. And so what's really happening is the world's changing, and it's changing rapidly, and the most relevant or important part I think for Canopy is that a lot of the changes reflecting very good public policy that's come out of a long history in Canada since 2001 of governing cannabis. And if you look at the areas where you see Europe, it's actually more interesting to see that there are beginning to be fewer places not active on this than there are places which are active. And so it is a global market. People get very excited about July 2018. That'll be a big deal. but it's really how does the rest of the world follow. Go ahead, Alan, next one. I put this in because I think we have an obligation to, but I think it's not necessarily reflective of the facts. And when I say that is, when they contemplated these numbers, I'm not sure they contemplated the evolution of the ingredient or the necessary research to turn that ingredient into comprehensive medical products or a diversified offering of really differentiated adult access products. And so I think this really reflects how much do people spend on what's available today, and it's quite a lot. But it doesn't, I don't think, properly foreshadow if and when we're disruptive to a variety of the existing medicinal ingredients and or alcohol beverage markets, how much will the market be? But enough to say that for sure we all agree it's a pretty substantial chunk of business which exists and just isn't regulated and will be. Go ahead, Alan. And what I think people are going to migrate to is, and we've thought this since day one, is you're going to want to buy something that you can know is consistent, quality, and aligns with how you perceive yourself. And so from day one, we've talked about the 54-year-old woman with a Gucci bag who has not bought a joint, maybe in her life, and for sure not in the last 30 years. What's she going to look for? What's going to happen with that 28-year-old? What's going to be the appeal based on income? And so we spent a lot of time making sure that our products land in, I'll call it brands, so you can identify which one you align with and products can fall under them. And so the medical one we've tightened up quite a lot. Spectrum Cannabis is how we brand ourselves medically in the world. And someone may ask the question about, well, then why didn't you do that in Jamaica? I think you probably can imagine why, because it's going to be a more interesting open medical market perhaps. But the balance of the world, it's Spectrum. And when we go to Germany, it's Spectrum with a K because that fits better. But it's really about what's behind Spectrum, which is an educational method that you can take doctors through a learning program that everywhere we go is going to be the same. There's going to be a lot of prohibitionist concerns. There's going to be a lot of skepticism. And the effect of being able to have a well-structured educational program that will have taken tens of thousands of doctors through it over many countries, I think will be a very important first step because there'll be gatekeepers in every market. As you move through premium, obviously premium could become adult access, and then value added gets into how we package certain things. So right now our value added includes what's legal, which is gel caps, but we have them, of course, under the Black Label Reserve. And then the aggregation point for transactions, which we think has been a pretty good move to get more traffic, more talk, and more products. So when you look at our store today at the Main Street versus April 10th when we opened it, the big difference is it takes you a lot longer to shop through it. And it allows people who are, I'll call it craft growers, to have a future where they have a commercial platform, which I think is pretty consistent with some of the objectives of the federal government. Go ahead, Alan. To me, this slide is the evolution of our world. In 2014, April 1st, we had about 8 people whose job was to quit peddling whatever Novartis or Pfizer or Purdue is selling and come in and educate doctors on cannabis and why they should write medical access permits, because in 2014, the only question was, how are you ever going to get a doctor right? And what they had to write was a script or medical access form for the dried cannabis on the left. That was an extraordinarily tough job for those people who'd been used to selling pharmaceutical products that, as we move from left to right, has become, frankly, quite a lot easier. And so our core products, and the ones that we'll have for sale on adult access, the ones we have today, range from dried cannabis to the oils that we create in compliance with the federal rules, which are that they are a non-vaporizable liquid at room temperature, frankly controlled to the concentration level. And then we've spent quite a lot of time and money creating a facility which is GMP1, which is a pharmaceutical definition, gel cap, stabilized, consistent milligrams per milliliter gel caps. And when you change the form factor in medical, you change the support and adoption, but you also change the margin model. And you quit going from cost plus to real margin calculations that reflect the form factor. And we're pretty confident that that's not going to be unique to medical, which is in part the reason we sought out and established a partnership with Constellation for Adult Beverage. Go ahead, Alan. So what's the adult access market like? Well, I think in Canada right now we have about 200,000 medical patients. And it's always difficult to give a precise number because that data isn't very current. So how many will we have next year when the form factor of gel caps and the continued discussion of why people switch from certain other medications to this? I don't know, do we add 100 or 200,000? You guys probably have a view. I have one. And then, well, I think every day someone will keep track, but there are probably somewhere between 1 and 100 articles in the media that reflect some kind of curiosity about cannabis. And I suspect that rate of visibility in Canada is going to continue and increase. And so I imagine what will happen is that if you're curious and you want to try it, you probably got to buy it. And so what does that mean for the back half of 2018 in terms of the total number of people who potentially become a customer? I think quite a lot. I don't think we'll know as we conclude 2018 what the normalized buying pattern is, but we will see a burst. And that through 2019, we'll be able to start seeing what people prefer. And I suspect what we'll start to see is that the preference becomes aligned with the products that we won't be able to sell at the beginning of this process, but might be introduced. And whether that's beverage format, whether it's edible format, or other strategies that could involve concentrates. But the launch pad, I think, is pretty substantial. And one of the analysts out there, which I'm not sure if I'm allowed to reference, but in the absence of certainty, I probably will say Cowan, did, I thought, an interesting article where they picked up a number of comments made by participants in the alcohol business as to why they were not really super excited about cannabis. And so there's been a number of statements on the public record that say that they see this as a big disruptor, and we agree. So that market, big launch pad, let's normalize after 2018. Adults, what's going to happen in adult access? Well, we saw, was it yesterday, I believe? Could have been yesterday. The province of Ontario set out what they have as a three-tier or three-pronged topic. We saw New Brunswick make an announcement as to how they're going to work with us in organogram, which really means that you've had one province confirm that they want to buy some, and a bunch of provinces confirm they plan to sell some. And so I suspect between now and the end of the year, there'll be quite a few more that need to get organized as to their source of supply, if in fact them selling some is going to be true. And so it is an interesting time. How the retail framework comes together, works exactly, what parts we get to contribute, what parts are run by the provinces, how that changes over the next 2 years. There's a lot of things in the air. The good news for, I think, shareholders is we're pretty flexible in how we work with each province. And if they needed us to do everything, we could do it. And if they want us to only supply product, we could do it. But there is quite a lot of tension and I will call it eagerness at different provinces to get this locked down, because it's a bit like musical chairs. They may find that the last 2 or 3 that get to making an announcement are trying to cobble together 20 small suppliers to make their store look full. And that'll be a very different program than dealing with a couple of large capable suppliers. Go ahead, Alan. How are we doing it? Well, we're a bit busy. I've had a couple of questions. What do you plan to do with the $245 million? And I think a better answer or question might have been, what would you do in the absence of it? And I say that in that you want to have a fully funded capability to build out here, and you want to be able to go internationally and create a both production platform and then a vertically integrated process by which you extract the oils, you turn them into finished goods in a variety of places and methods. So we've announced activities in Fredericton. You see a bunch in Ontario. We've built out and are awaiting license in Saint Lucien, where we've got our first crop to come off already in Yorkton. We're busy building out and upgrading gear into Edmonton. And we announced, I guess now it's about 3 weeks ago, an initial 1.3 million square foot greenhouse that's in the Lower Mainland, and that we're working through the process of doing what we did in Niagara, which for those people who are historians, you may remember that about June 19th, 2014, we acquired a thing called Parkland Farms or Parkdale Farms, which became Tweed Farms. It had an application in, but no infrastructure created in order to be licensed. And on or about August 11th of that same year, we had a license. And we learned quite a lot about running the greenhouse and quite a lot about getting licenses. So I think we probably understand reasonably well what it'll take to bring 1.3 million square feet into a production platform that the government could review and find suitable. So the other part of this, maybe just one more back, Alan. If you're in any of these provinces, I think people will find that logistics and having product available to the province requires sometimes to have it nearby, because some of these provinces will probably require direct ship to their stores if they haven't figured out all their warehousing and inventory. And that medical patients increasingly will expect quite high quality service, which means same day, next day. And so part of what we're doing is diversifying across the country for reasons of access, operations, and sometimes politics. But that the effect should be that we can actually be a preferred supplier, not just because we have product, but because you can get it when you want it. And I think that will increasingly be a relevant topic as we go through 18 and 19. Go ahead. That is, we went too far. That is what the front of our building will look like in about end of February 2018. That's in Smith Falls, and it's reskinning and re-roofing a portion of our building. So the building's about 50,000 square feet. We initially started in 168,000 of growing extraction area, and the entire place pretty much is a construction zone where most things have been cleared out, demolished, and we're now in the process of rebuilding and structuring in more growing production, a bunch of areas which will create outcome products. That's what I mean in terms of a finished product. And if and when we're allowed to host people, we think that the fact that 300,000 to 400,000 people used to come on tours of the Hershey factory for many, many years, go in a nice little walkabout so they could see how is chocolate made, and then at the end of it be dropped down to a lobby where they bought, it sounds like, about $10 per person annually of broken chocolate bars. And so that was about $3 to $4 million of business for Hershey. And the nice part is the last person who did that tour was probably about 8 years old, maybe 10, and that occurred about 9 years ago. So they'll be about 19 now, and that there are a great number of people above that I suspect one of the best days of their young life was going on a tour of a chocolate factory, and we'd like to welcome them back. And I think that'll be a valuable brand building item, but it'll also be pretty valuable for the town of Smith Falls. And I imagine people are on this seminar. One of the things that I think has been an advantage and of increasing advantage is that everywhere we've gone with Canopy, we've tried to do it where we have really strong local engagement. And I suspect you won't find any place stronger than in Smith Falls, which means that when we're trying to push buttons to get what we want at any level of government, we certainly have a great deal of support from the local government. And bringing tourism back to here would be probably the best and most shocking thing that could ever be achieved, because when Hershey left, I don't think anybody anticipated that. You might have more tourism again. Go ahead. People don't love it who are in our sector when I refer to what we're growing as an ingredient, but it is. And ingredients over time become defined by their quality and their concentration levels, and they become priced appropriately. And so in the pharma world, they might call it an API, active pharmaceutical ingredient. And in the consumer packaged good areas, similarly, they get sort of brought down to a milligram registration level, and over time that will happen. How long it will take, I don't think anybody can predict for sure, but it's 100% certain that this will become a commoditized ingredient, and that those who are really good at growing it should get really good at growing it, because it will be a tight margin game. And as many things happen, when you make a product out of those ingredients, you get quite a lot of benefit for creating something that people prefer to consume and associate with as a branded good or a medical outcome product than you do for the ingredient. And so since day one, we've been working on that, which is probably why some of the parties are finding us interesting now, because we're progressing against that perhaps as well or better than others. Exhibit A. Alan had asked me before the call, when did this begin and how did it begin? And I had to answer that I wasn't exactly sure. I know that the first time we talked to them, it was warm, not hot. And the reason we were interested in talking to them is that it was fairly clear that most of the other parties in any adult beverage business were uninterested in talking to anybody in the cannabis business because they were considered the bad guys. Yet we observed some media commentary from Constellation that sort of said they're interested. And so often what you'll do is, it's a bit like meeting someone. You ask somebody who you know if they know somebody like that and how you could be introduced, and that began as a strategic discussion. And it's probably impossible for people to believe me, but it wasn't actually particularly about the money. And in the process of closing this, which went on with some intensity until last Friday night at about 11:55 p.m., it was about the strategic fit. And when I mean that, it's culture. if you gave me a chance to have this kind of cash from someplace that didn't actually have somebody running it who's directly the descendant of the founder and has high IQ and strong driving business and entrepreneurial, but instead give me this kind of investment from a bureaucratic place that needed to have a board subcommittee to decide to do something, we wouldn't take it. And in the period leading up to this closing, you saw quite a number of bought deals presented to the market. You can probably imagine how frequently my phone rang with options of that nature. But what I thought was that anytime you do a bought deal and get cash, it ends up doing the exact same jig, which is it goes into the hands that buy it. They thereafter quickly sell it. The shareholder list gets longer and the trading pool gets bigger. And I think instead in this one, we end up with a very nice shareholder who holds capital and has a strong interest in actually dealing with how do we create a future together. And so that's kind of what we're up to. Next slide, please, Alan. There's a bunch of divisions, so people who've been following Canopy might think that we have a interesting structure and that Canopy is the capital markets holdco, and under it has quite a few companies. I think we're up to 32 now, and I wouldn't detail each of them, but each site that has a license has to have an actual LP or a licensed entity that holds it, so I'll call it a corporate structure. But one of the ones that I think is quite interesting as we go forward with all the talk about adult access is Canopy Health, which is something we've been at for about a year and a half. We've done 2 rounds of financing. We've filed an interesting array of patents. And what we're focused on is how do we, in the midterm, have a great deal of interesting potential medical outcomes that are driven by the capability to make advanced oils. Those feed into this separate corporation, which is funded by people who are interested in biotech more than cannabis stocks. The intellectual property created there then comes back as a commercializable item by Canopy, so that what we have is alignment between the investor interests and timing, our willingness to provide oils in, and our interest in Canopy to have commercializable medical products. And so keep an eye on this one. It's private. It's intended to be sophisticated and pursue medical outcomes that are disruptive through the known paths of government. And Canada is a very good place to do that. Next up, please. I think we're now running around in about 6 countries actively and announced. I was in New York yesterday, and the fact that there's been many occasions where we could have probably made quite a lot of profit for the shareholders and chose not to. And those were occasions where there was plenty of times when it would have been quite easy and normal course to, I'll say, exploit vets and try to make extra money for ourselves. And we didn't do that. Some of the people chose to do that. And the effect was that now the vets have a constrained amount of product that they can have. And, you know, we could do that in, you know, by running into America. And the effect of that would have been that I would not have been able to do a deal with our friends down south at Constellation. And so the map is clear where we go, which is where it's federally permissible. And I suspect over time, somebody in our regulatory environment in Canada will actually begin fully doing their job, which is to make sure that companies that are not operating outside of prohibition don't operate in the Canadian market. But we've self-governed, and I apologize to those people who would have liked me to make shortcuts to make profit, but I'd sooner have a long-term business, and that seems to be working okay. Next up, please. So, oh, that's it. Go ahead. I think, Alan, when we talked, I said I would try to get my stuff concluded in 15 minutes. I think I've taken about 22. But if there are any questions about what we're up to, I'd be delighted to answer them.
Yeah, you did a great job, and often I have to throw a couple questions out there to warm up the crowd, but we have a bunch, and I want to get through them all. But before we do that, just a big picture question about the Constellation deal. And, you know, you mentioned the strategic importance being the most important thing to you, but I'm wondering how you think it affects the rest of the industry in terms of will there be more deals like this across industry, or will this force consolidation in Canada, or you don't even care about all that?
Well, I don't think there's, we have a partner in the drink category called Constellation, and they have a partner in the cannabis category called us. So if there's anything that goes on, it's going to be maybe with other actors, and there aren't very many other actors similar in any way to Constellation. So that could happen. I also think many of them are governed by people who really like their paychecks and don't want to make a bold decision. So I suspect we'll probably have a bunch of watchers for another year or two. I think a number of people in the media had the view that this validates the sector. And I don't mean to be difficult, but I don't think it does. I think it validates the public policy as Canada having a right. But the sector as a whole didn't end up partnering with these guys, and they didn't end up seeing the capital that come in, and they won't have the ongoing working relationship. And so I think that you're going to find over time the sector doesn't trade as a sector, but you break the trade because there starts to be comprehensive companies that are seeking to be the best in the world, and a number that will feed into that. And you know, I don't ever want to sound like I'm trying to be arrogant or braggart, but I think this is very good validation of public policy and very good validation of Canopy.
So you guys have been a consolidator. You bought Bedrocan, you bought Metrum, obviously, and you've bought some close to being
there, grasslands. Keep going.
So yeah, I know. So you bought some that are close to, and took them to the finish line. Are you done? I mean, are you going to let everybody else kind of consolidate in Canada if that's the way it plays out?
I think we'd be satisfied with somewhere in the neighborhood of a 40+ market share. And so you got to make sure you have vertical integration capabilities to achieve that, but I'm not trying to be a monopoly. And the things we're doing now, I find it more efficient and less costly to migrate assets rather than acquire. We've looked at, I think, everything that comes up and continue to look at everything, but I'm not seeing a lot of things come in with a value to price match that we see as reasonable.
Okay,
if you're in the licensed world.
Okay. Sorry, I have one more question, and before I do that, I just want to remind everybody, just type in your question if you have one. I'm going to get to all these in just a moment. And my last question is just, there's been a lot of interest in your oils. I saw that huge machine, and you guys have been addressing some bottlenecks, but and I know you're kind of in a quiet period probably with earnings coming out, but can you just big picture talk about that process of really cranking it out on oils? Because you guys have a lot of opportunity in oils, obviously.
Yeah, so we started on the path of what's our extraction platform look like, where is it going to be geographically located, what's the different target product categories, and we're about a third to halfway through rolling that out, which what you want to do is you want to get it right once and then compound it out to different geographies or different technologies. And so the first one we started off with was, off-the-shelf waters machines, and they were, they did an okay job for what they do. And then we moved up to the AES, and now we're moving through a bunch of the steps that are pre and post extractor, because, essentially that's like swapping out a 4-cylinder engine and putting in a V12. And so what you have to do is change a number of the attributes around the V12 so that you don't blow your transmission or your brakes or something else. So that part's working. And as we go through the year, we're getting a lot of that dialed in. And so our objective is to get really competent as we work our way through this year, keep scaling it up as we step into next year, and be really ready for the big tsunami of the second half of 2018.
Okay, great. So now we'll get to the smart questions. And the first one, and maybe there's a bigger piece to this, but the question was specifically asking about the restrictions that were imposed on Constellation Brands with respect to the deal that you guys did, but just bigger picture with the deal that was done. Obviously, they have the warrants to buy more, but can you just address what types of restrictions they might be subject to?
So I won't get into the details of the deal, but they're our beverage partner, we're their cannabis partner. They have purchased the shares. The shares issued capital. The capital goes on an unrestricted basis into our company, and they will be an observer at the board, but we're really driving as hard as we can because that's how we work. As far as the warrants, the first half would be eligible to them in April or August of 2018, and the second in 2019. There are specific considerations that have to be maintained or met, and I'll leave it at that, but it's not a do whatever you want, and they're still there as you wouldn't expect. If I did a warrant-based offering in the general markets, people pretty quickly sell the share and hold the warrant. And that's why to date, this is the first occasion, and you guys on the call might take it for what it should be viewed as, in every financing since I started this company, I've never issued a warrant. Never thought it was something that I could actually justify or validate. And on this occasion, I agreed and think it was a good idea. And so you can imagine there's a bunch of ways to look at that, but it wasn't casual.
I hear you on that, and you were right. You've never done a warrant before. The next question.
I think I've been pretty vigorous about why I hate them, and in this occasion, I actually quite like these.
When a strategic partner is involved.
Yep.
The next question is just about, are you seeing any backlash from the pharmaceutical industry or alcohol industry? You kind of alluded to that earlier, and if so, what are you doing besides obviously this big deal, but is there anything else that Canopy Growth can do to address those threats?
Yes. So I have what we think is the world's best partner for us in the product category of adult beverage. We are completely open and always talking and looking and thinking about how do we work with people who are in other categories, whether it's pharma, tobacco guys, with heat don't burn technologies. There's always a eagerness to find the right dance partner for the right segment, and we have at least 2 or 3 more that we have to think about. And so obviously I can't say who, what, where, when, but there's absolutely nothing that would obstruct or discourage us from doing that.
And is that in the beverage category as well? Or
Yeah.
you kind of...
So no, we have a beverage partner. We love them. We're all good.
There. Okay.
Yep, but there's a whole medical pharma world, and there's a whole bunch of IP around, how could we actually, if and when we're permitted to make concentrates for vaporization, have the right combination of technologies or partners for that, or pharma. And so that's always I'd say there's at least 2 open check boxes that we'll hope to someday find the right parties.
Gotcha. Okay, another question from an attendee. How does your view of recreational sales fit with the mainstream estimates that are out there? I think you kind of addressed that before. I think I know the answer, but I'll let you.
So the 700,000 kilogram estimate from the Parliamentary Budget Office as to the necessary quantity, I think, to extinguish the black market may or may not be the right number, but we're not selling the products one for one that are in the black market initially. So we won't be selling concentrates, we won't be selling edibles, and we won't be selling beverages. So what does that mean as a matchup on the existing demand in the channels? I don't know, maybe it's a 45% of the existing market on day one, and they layer in other aspects of sale, which will increase probably the margins and the demand as we go into 2019. And so I think supply might end up having allocation problems. If one province demands too much, what will happen to the one that doesn't get any? But I don't think that the total gross available product is going to be wildly out of whack when we need to be there, and that the question only is going to be about new products and margin and who creates them as we enter 2019. But I don't feel the alarmed urgency that the newspapers would like us to feel, because they haven't really compared product to black market, regulated market.
Yep. Another attendee asks about pricing, and you guys are obviously working with some smaller growers, but I'll broaden his question. His question was just about small growers being able to lower the price, I guess. I don't know if it even would work that way. It's usually the big guys have the lowest prices, but do you see the black market pricing being a problem for you guys? I guess we're waiting for the final tax rate.
I think there's these things are always more complicated than that. I think that if you look at the distribution chain for the black market, I think it's going to be constrained quite a bit under the new rules. And I think the consequences of being caught growing, and I'm not talking somebody with 10 plants at their house, I'm talking somebody with a greenhouse full of product. It's not licensed and is illegal. I think those operations are going to be much more specifically targeted and closed down, which means the cost of operating the black market production platform will probably go up. And if your sale points disappear, you start to have a different game for the black market. And so I think you'll probably find that price is a factor, but I suspect the cost of creating black market product is definitely not going down. Ultimately, I think there's a number of people who probably could buy a variety of other products illegally that choose not to, because it's a preferred supply chain just to go where you know what you're getting. And in the day and time of so many other negative stories about other illegally purchased products, I suspect there's going to be a flight to certainty and safety for the majority of the Canadians, which we probably will find to be newish customers and pretty competent ones.
Okay, and then a question about distribution, and obviously you're working hard on all the provinces. We don't have all the answers, but and I know you're fighting for online and even to be able to do online in Ontario yourself. What is your outlook for Main Street being able to serve the rec market?
I think it'll be province by province, and it'll depend how well and how structured each of them can be in time for go time in July. And ultimately, our proposition is that we're ready to go. We can reskin it as you want. The certainty of shipment is there. The inventory thing is managed. And really, in order to make good decisions as a bureaucrat, the thing you're lacking in setting this up now is you have no data. You don't know who, where, what, when, or with what frequency. And so if you allow us to assist you by just helping for 6 months or a year to whatever you'd like, we'll remit back to you. We wouldn't see a materially different margin model for ourselves, but what we would see is data. We'd know the buying patterns, and then we could share that. So that as venues and warehouses and formats and SKUs are being established, the bureaucrats would actually have something to rely on. And I don't think you should underestimate the value of data. You can make a lot of mistakes if you don't actually have a clue of who your customer is and how you want to structure it. So we'll see, but I suspect that'll get to be a more urgent topic as we enter 2018.
Okay, a question on alcohol. Obviously, the press release was very careful to say that Constellation is interested in a alcohol-free cannabis product, but do you see combined products being legal in any of the markets you operate in?
We haven't even explored that. We're entirely interested in making it not as a combined product.
Yep.
So our approach is that what we have to offer might be extremely appealing, and if we do it just right, you can end up with something that's quite a different offering and doesn't have alcohol, therefore it may or may not have calories. So I think I think that there'll be crisp categories separated. And I think it was yesterday, the day before, I was talking to somebody who was a former very senior person with Molson's, a brewer, and 15 or 20 years ago, or maybe more, their goal was to try to figure out how do we get caffeine into beer. And they couldn't find a way because even mixing caffeine with alcohol. So, vodka figured it out by Red Bull being served with, but not infused with. There's going to be rules around this, which I think will probably hang out for quite some time.
Okay, and then you talked a lot about global. Obviously, we didn't really get a chance to go into it. Some of the crowd may not appreciate it, but Germany, huge market, medical, maybe going fully recreational. You guys obviously have a foothold there already. What's your, and I know they've been changing their timelines, what's the latest on Germany?
So, well, I like Germany a lot because they have rules for everything. And one of the rules is that if you're involved in an RFP, you can't discuss being involved with it. So I will just leave it at that. We began laying down track on Germany way more than 2 years ago when we were choosing how do we get our GMP certification. We thought it was better to get European Union with German certifiers, so we did that. When we structured it, I think that if you're trying to expand business globally rapidly, having partnerships or JVs is not the way to do it. You need to actually have localized control. So we made the acquisition, I guess it's about a year ago now, of our German group, and they have the right and licenses to import and distribute cannabis to the pharmacies and are doing so. And what we're seeing is a lot of the best practices of Canada are turning up in places that range from, look similar to, say, whether it's Denmark or Germany or Australia. So I really think what you'll find is that while we're easily captivated by what's going on south of the border, there's actually a lot more going on that's going to be relevant to what we do in Europe and other, I'll call it Australia and South American countries. And so I would think Germany is just an early indicator, but it's certainly not an oddball.
Okay, and then another international question. Israel, and there's been one announcement there, I think from Kronos Group, but what is your view of that market in terms of the ability to either produce there or take IP from there or send it to there?
Yeah, I think the IP opportunity is an exciting one because there are very good medical devices and testing methodology experience that we've seen coming out of Israel, and we look at a lot of that. But Israel is not the place that's ideal or optimized for producing agricultural products, right? This is a place where a great deal of effort goes to make sure that water is properly recycled because it's a scarce commodity. So it's not an agro powerhouse, but it is a devices powerhouse, and it is a science integration powerhouse. So we're really looking at those things. I don't see it as a mega producer.
Okay, I'll throw in my own question because this is something that I think's really coming onto the radar quickly. Colombia, and I know you have your Brazilian exposure, but is that a market that looks interesting to you guys in terms of?
Well, I think any market that's federally legal and can be self-sustaining as a business without the dependency on exports is interesting. And so on that basis, yes, I think Colombia is interesting. Chile is interesting. Brazil is interesting. Other ones where the business model is that we're going to export loads of it, I don't know that that's actually going to be a true statement. Because there's a whole bunch of, there are so many ways that can be made not to happen because of the UN perception and reality that this is a very dangerous narcotic, and you can't demand the importation or exportation of something on that list. And I think that you'll find that many geographies are quickly realizing this is actually not about governing cannabis, but it's about economic development. And all you have to do is look at our own country. What was the first province to figure out they really like cannabis and they want to do a lot about it? New Brunswick. Which province probably has the most focused effort to try and find economic development because they don't have so much oil and they don't have so much wealth? New Brunswick. And so I think you're going to find that most of the world realizes they have pockets of areas in their own country where it would be preferential to have production than to export money and import cannabis. And so I kind of think that you probably don't want to live on a model that's all about import-export for some years. Maybe when it gets to be down to APIs and pharmaceutical ingredients and there's treaties around that and da-da-da-da-da, but that's not probably tomorrow.
Interesting. Okay. Another question on distribution. The shoppers had made a big splash a year ago, and I haven't heard any real update officially on that yet, but do you see pharmacies as being a big part of distribution? I haven't really heard much about that recently.
Well, I think you kind of answered it there yourself, didn't you, Alan?
Yep.
They made an awful lot of noise about it, and I think they will become part of the system, but I'm not sure that it fits into the priority of the government to try and make this a different distribution on the medical, because their electoral promise was about having adults be able to choose for what do they want to have for Friday night, and it wasn't about changing that. Now, over time, I think as we create in places like Canopy Health more defined medical products, I've yet to meet a pharmacist who's interested in selling dried cannabis. But if they had something that was OTC or another product category which might be competitive with some of the other products they have, and they could be brought through an educational program and could assist a client patient in making the best choice, I bet they'd like that. And so I think they will be an actor, but I don't think that it's something you're going to see in, we're not feeling it really intensely for 2018.
Okay, and then you may want to pass on this, or you may really want to address it. I don't know. Somebody asking your prediction for how Aphria, what will happen with the Aphria TSX issue right now?
Well, disclosure is a funny thing. I'm obviously super simple because I don't understand how when you disclose that you're breaking a law, you're allowed to break a law because you told everybody. And I think the answer from the OSC, who's the regulator, is that they're going to rely on the Cole Memorandum because that's the current document. And that current document dates back to the Obama administration. And if you look at the overtures of Mr. Trump and Mr. Sessions as recently as probably today, there's still some pressure, and increasingly so, that if you're producing cannabis-based products in America, they're not happy about it. And so I suspect what's going to happen is everyone will do nothing, and that transaction will go through. And then when new information comes along which says that the Cole Memorandum no longer applies because there's actually a new president, which is quite remarkable that CSA was not yet aware of that, that they will then adjust the rules to reflect the new memo, which will say you can't do that. And but what will happen is that will cause a different range of problems. It won't be as bad if you have already cleared a transaction through one of the exchanges. And so I suspect it will be business as unusual as it is in Canada, and that will get somewhat remedied. But you guys sometimes say you're going to move up here because of your president. I'm sometimes going to move down there because we don't have an SEC. It's an absolute embarrassment that we have a country which tries to create all kinds of small companies that doesn't actually have a national regulator. And so the effect is a super inconsistent, slow reacting, because they need consensus across a bunch of provinces, which, honest to God, even agreeing across some provinces what week to hold a meeting probably takes a year.
Hilarious, or not so funny, I should say.
No, but it will go on, and I guess disclosure is correct. If I told you I'm going to, I kind of want to start a mining company, and I'm going to actually focus on, I don't know, some place like the Congo, because I bet I could disclose that I intend to follow the social norm, which all this is the social norm, and maybe I can get away with a bunch of stuff if I promise to bribe people or do worse. And if I disclose it, I wonder if I could actually get an offering out. We'll see. It's kind of unusual.
It'll be interesting to see the way it resolves, and maybe we down south of Canada will get lucky, and Donald Trump will get on board, and this will all fix itself, and you can enter the market too. That's really the best scenario.
Hey, listen, man, you already had one miracle in the last 24 hours. Houston won the World Series. Don't ask for two.
That's true. So another question on pricing, a little bit different. I like this one. How do you feel about the price of the commodity falling with more large-scale cultivations coming online? And more importantly, what are you guys doing to protect yourself from this potential trend?
Well, I think it's for sure going to fall over time. The question isn't if, it's when, and that'll be for the ingredient. Now, if you're in the ingredient selling business, you should really think about that. If you're in the ingredient mixing and making business, I don't think you find that fluctuation in price of potatoes or wheat or rye or other grains or vegetables affect necessarily the price of other upstream products, whether it's bread or booze. And so I think the key to a strategy to defending margin is aggressively expanding the product offering so that you actually have differentiated goods that people prefer to buy versus ingredients. And that's like not new to our sector, and it's not new to us. But you know, it will become somewhat commoditized. It will be a bit of an odd commodity because it won't easily be exchanged. Everybody can't play in the game, because if they did that, then the black market is for sure 100% back in business.
Yep, that's the way it's been in the United States, Bruce. With the commodity itself has been under pressure in the more mature markets, but we haven't seen retail prices fall at all. So there's that margin works out really well.
Yeah, it's not a bad thing, and right, like I remember, I think I was really attentive in about the first 10 days of my first year economics course, and I'm pretty sure we covered that. Right, like this is just simple stuff which will have a little complexity because of the nature of regulation of the commodity, but it's all about creating vertically integrated value.
Yep. Okay, and then this one's right up your alley, I think. What is Canopy Spectrum making in technology for patient support, usage data capture, and things like that? And are you finding that there are a lot of technology partners out there? Do you have to invent this yourself? What's going on in terms of capturing data?
So it's a good question. You know, we've done a number of studies which pull in why are you using it with what frequency, and the next thing obviously is to move to dosage pattern analysis, and more than that, actually, if you want to call it reminding dosage, so that people don't actually follow the synchronization with the plan of treatment. And that will lead again to what I'll call observational trial outcomes. So we're working through that. Part of the interesting part is it's a lot easier if people are using something that can communicate with a smartphone and do something like vaporization, which isn't currently permissible. And so there's a little bit of a bridge, kind of technology, kind of regulation. But when regulation of the product allows, I think we'll be just in the right spot with the technology.
Gotcha. And then we've talked about distribution, another one on that topic. So it's not looking like this is going to happen in a lot of provinces, but maybe in BC, there'll be standalone dispensaries that you theoretically could operate. Would you be interested in that?
We're interested in anywhere we can go to that end. We didn't pursue that angle in Alberta because I think it's highly unlikely to happen. So it's better not to alienate the incumbents that are likely to win the business and rather work with them. That's why we're aligned with the liquor store owners. I'm not sure that if I had to pick a province, and I think, you know, I've had this chat over the last couple of years, if I had to pick a province that's the least likely and last to be sorted in Canada, it's for sure British Columbia.
Yep.
And it's because if you're the government of British Columbia, which is a new government, I don't know if you're watching it, it actually has kind of two teams who are leading, and they've never actually had the chance to work together before. to come out strong on a model when you don't actually love the Liberals. So they're fighting quite a lot about pipelines and things like that. So it's not like they actually want our guy with great hair to look awesome. They don't really like him. So they don't have the political urgency for him. They have an awful lot of dispensary history there, and they have a huge amount of the production of the illegal product in the country comes from there. So do you have a whole lot of things lining up to say, let's go hard, shut that down, squeeze out dispensaries, and make Trudeau look good? I just don't feel that. So there may be something that we can do there, but I wouldn't say that our efforts and focus are proportionally represented there based on their population. There are other geographies that are lesser populations and seem really more aligned.
Okay, another question. You from the audience. You obviously bought Metro, and one of the things you cited at the time was getting into the hemp market a little bit, and the laws in Canada are a little bit behind there. But do you think that hemp will be a big part of your company?
Well, Canopy Hemp is one. I mentioned a whole bunch of companies under the Canopy. Canopy Hemp's one of them, and we've been beavering away at that. But there's not a lot of benefit to put a whole bunch of press releases out because you're working. People kind of think we should be working. Kind of that's if you're not working, I should have a press release saying I fired a bunch of people who weren't working. So Canopy Hemp makes a lot of sense. When will the legislative consent occur that we can actually transform the hemp plant outputs into CBD? Don't know, but no sense standing around. In the meantime, there's quite a lot to learn. And we ended up with hemp division, the piece that came out of acquisition in Quebec. We ended up with the one out of Metrum, and we already had some work going on inside of Canopy. So we've consolidated under one group, and on a daily basis, if I get a bit hungry, I have a hemp bar, which is a bit like a sesame seed snack, but better. And if you find that you have chapped lips, I strongly recommend the Metrum product because it is amazing at dealing with that. So there's a bunch of stuff we're doing. It's just not visible yet because it shouldn't be.
Okay, I'm working through. This is a very nastily worded question. I'm going to change it.
Is that T from Toronto? She's a master. No, I'm just joking.
I think it's somebody that this is a sector problem, right? It's like everybody raises capital, seems very well capitalized, and the next thing you know, everybody's doing bought deals again, and you guys just lined up maybe up to $500 million. But the question, I'll ask it in a neutral way. When do you see the share count stabilizing, or where are we in that whole capital raising mode for you guys? And I'd ask for the sector as well.
So I hate dilution, but you know what I hate more? Bankruptcy. And so if you're going to accelerate and you do not have a normal commercial instrument, so what do we have? A couple $100 million of real tangible assets. We have significant and growing revenue streams, and we have a high probability if any of these things happen that we're actually going to have cash flow positive environments. Yet the banking sector does not give us normalized instruments. I am unable to get a rollover mortgage. In fact, in New York, I was complimented as recently as yesterday at having such an incredibly clean balance sheet.
And you were upset, right?
Well, yeah, I'm like, you're pissing me off. I can take you on a tour of any one of my buildings, and I can tell you how many shares I had to sell in order to buy a door to go into a grow room, depending on when the door was purchased, because I know what our share price was for every deal. And I think your person who's pissed off about it should be, but they're pissed off at the wrong party. They should be pissed off at the big banks, because those guys have caused everybody in our circle to be more diluted and for patients to pay more for product because we couldn't have normal sorts of debt. And if somebody really wanted to be assertive, I bet they could start a action against the banks for having caused them to have to pay more for their product because they decided not to support a federally regulated entity, which isn't so terribly different than the big banks who make all the money. And so I agree with them. They should word it nastily. I don't like doing the deals. I would prefer to have real lines of credit, but I don't want to focus on becoming profitable yet because I think there's still quite a lot of work to do over the next 12 months so that we actually get the massive rewards that should come to doing this, not the minor ones.
Yeah. Okay. This is one of my questions, and we have probably about 6, 7, 8 more minutes. And my question is, obviously you saw Cannabis Wheaton bought an LP, and I know you guys have a competitive entity, or you would say it's not competitive, it's better. But Canopy Rivers, you didn't really cover it in the slides, but how do you see kind of that whole space of being an accelerator to the rest of the industry working out, and any update you have on your views on cannabis?
Yeah, so Rivers is What we intended with Rivers is to be something that if you were a really cautious investor, this is a way that you can participate in the sector, because what it does is it finds entities which are somewhere either trying to get licensed, trying to expand a license, or somewhere along that spectrum. And we lend them debt, which then is the superior position to all equity. And further to that, we then help them spend that debt properly, because the way it works, suppose Alan's got his spot and he thinks he's going to grow 1,000 kilograms. But if he works with us, takes our SOPs, Canopy Rivers gets a third of all the produced product in order to repay the debt. But that also means that if you're terrible at what you do, we get 333 kilograms. But if we work together, we can make that a 1,200 kilogram output. You are better off and we're better off. And so what we try to do is always have alignment with those who want capital, who want support, who want advice, and want an offtake agreement. And we stay really tight to that. And we really try to keep our overheads low, because these things should yield about 12%. They shouldn't trade at a crazy premium, because they are sort of like a securitized debt instrument that gets repaid from a flow of cash that comes off of selling cannabis. It is not a big promote. And so when we put ours out, there was almost no uplift above the cash value, because that's not justified. We don't want in Canopy Rivers to buy and control a single entity. And for the guys down at the Rock Garden, like we know Andrew very well, that's a great deal for him. I think he's getting like $27 million for 800 square feet.
Right.
I could probably sell you my lobby on that basis for about 50 million. So that is a great deal for him, and we'll see if it was an astute deal. But Canopy Rivers' only problem is we've had such a lineup, we've used all the cash up, and now we're getting more. And it's not too hard to get more when people can actually see positive cash flows in a disciplined EBITDA model.
Yeah. Okay. And then you did talk about Canopy Health. We have a question for the audience, and maybe you can just go into that in a little bit more detail and explain how the financials work there. I mean, I understand it, but I'd like you to say it in your own words, kind of how that benefits shareholders of Canopy, the way you've set that up.
Yeah, well, so people will think, God, Bruce is complicated, and it's not that I am. I would love everything to be simple, but I find every time I try to do something simple, it's necessary to become complicated so I get the damn thing done. And so in the case of Canopy Health, I'd been reading and working through, on a freedom to operate basis, a whole bunch of filed intellectual property claims that were kind of gunk and garbage, and I thought we could do better. And I wanted to have really smart PhD people like Dr. Ware, who's involved with us, come on and be involved. But frankly, if you're so good at school and you go and get all those degrees, going and telling your spouse or parents that you now work for a pot company wasn't really what they all wanted to do. But if we set up a research institute in which they could have a small equity carry if you became an interesting PhD to us, and we've been able to accumulate several, what happens is then I can get the smartest, best minds working on how do we turn this ingredient into a response against key indications. And the indications we focus at, there's a whole grid and file process by which we won't pick ones that don't work for a bunch of our financial and scope and scale reasons. So we picked them. The first one that we've announced is 27 patents now filed against sleep. And what happens is the smart PhD doctor person helps set together what the trial will be, and then a third party runs it so that they're not offside because of their equity compensation. And the oils, which are the stabilized ingredients, come from Canopy into that working environment. The intellectual property created stays in that working environment, which currently Canopy shareholders own, I believe, 46% of. Over time, will get diluted down. But coming out at the top of that machine will be products, and those products will have broad markets, and the commercialization engine is Canopy. And the Canopy Health will get paid a normalized royalty based on the size of the market price of the product, et cetera, for the sales. And so the shareholders here today don't have to fund the risk and rate of return that may be really high or zero on creating medical products. And they get the benefit in the proportional ownership of the IP in the corporation, but they also get the right to sell the product, which is we're a sales company. We're a company that produces things all the way up so we can sell them. And this kind of isolates the risk of research and is a lot easier to find people who like that risk and have them fund that and keep the alignment. Just as we set Rivers up as a separate thing, which we have about a third ownership, and we set that one up with a super voting right, so the shareholders in Canopy are protected, and that we have effectively a 20-to-1 voting right from Canopy for our cash. But I'm always trying to make sure that the investors into everything have alignment with the time horizons and the rate of return. And so the three vehicles have very different considerations for all of those. And so I think it's working pretty well. And we'll see as it pops stuff out over the next year or so.
Okay. And unfortunately, we have a lot more questions, and I apologize to the audience that we're not able to get to all of them, but I want to take one more, and that is...
It could be the problem that my answers are unduly long.
No. We've had a lot.
But I've never been able to discipline myself. I like to give the full answer.
That's for sure. So again, apologies to everybody. This will be the last question, but how will Spectrum develop an educational platform for doctors, policymakers, and patients? And I know that's important in Canada, but I want to make sure you hit all over the world.
It's huge. So I mentioned we've had these people visiting doctors since April 1st, 2014. The effect is I think we're now at 30,000 plus doctor visits that Tweed then and now Spectrum under Canopy had the first certified continuing medical education program, and it keeps getting better and evolving. So it's a not static thing. That program informs greatly how we want to educate doctors in any other federally legal jurisdiction where they have doctors who need to attend courses to continue to be certified, change the language, register with the right entity, and away you go. And so it's becoming, I think, probably the global standard for the best information captured through many rinse and repeat cycles with physicians about this topic, and as we evolve products into the market, they'll be captured into this. So it is a super important thing, because the question that was asked here 2 or 3 years ago is how are you ever going to get doctors to write, and that it's the same question when you think about Brazil or Australia or Germany or Denmark. It's all about the gatekeeper, and you need to do a good job of managing that, because we're not having a single question really on this call about how are you ever getting doctors to write, because that's kind of getting knocked down.
In Canada, right?
Yeah.
Okay. So I appreciate, Bruce, you're joining us today, and I have a quick question for you, because you've left your phone number up there. I know that's not the best way to reach you, but...
I'm such an idiot.
So
I did that without Metro. I finally got through. I did that when we acquired Metrum, and we knew that we had to clear the shop, clean the walls, turn up the HVAC systems the right way, get them to going again, that we had to communicate with customers so they understood what we're doing and gave us some benefit of the clarity. And after I read our letter that we'd worked on, I thought, I'd still be pissed off if I was them. I'd want to talk to somebody. So I gave my cell phone and my email, and I am now fully caught up. Maybe once every 3 weeks I hear from somebody, and it's more often now to say, hey, your people were great, thanks, versus you're such an idiot. So I would hope that phone number up there doesn't cause a cascade of phone calls, but
yeah.
Good point.
So I want to ask everybody not to call that number. You can always connect with the company by visiting the investor dashboard at our site, which you can find quickly by just going to the featured page of it. And then I will provide the IR contact just to let everybody know. But and I also wanted to let the audience know before we conclude that Canopy Growth will be reporting its fiscal 2018 second quarter next Tuesday morning and hosting a conference call then, and we all look forward to that. So thanks a lot, Bruce, and thank you everybody for attending.
Thanks, everyone. Have a good afternoon. Bye-bye.